Hello, good day, guys. My name is Nick, technical analyst with SuperForex. Today, we'll be looking at the technical analysis on the commodity crude oil. First, we'll be talking about fundamentals before we move right down ahead of technicals, which is purely what we're going to be seeing on the chart. Now, we have noticed that oil prices rose up to a 3-week high today, Tuesday, as China's latest easing of the COVID-19 restrictions has raised fuel demand hopes and concerns that winter storms across the United States are affecting energy production and a continued oil prices. And Brent crude oil has been up 88 cents, or let's say 1.1% at $84.80 a barrel, while the U.S. West Texas immediate crude was WTI, of course, was at 80.44 a barrel and 88 cents or 1.1%. Now, the two benchmarks touched its highest since December 5th in the earlier in the session. And on Friday, we noticed that Brent rose 3.6%, while WTI gained 2.7%. And both benchmarks recorded their biggest weekly gain since October. While British and US markets were closed on Monday for the Christmas holiday. While China will end its quarantine requirements for inbound travelers starting on January 8th. And the National Health Commission said on Monday, dropping a rule in place since the start of the pandemic 3 years ago. Now, that spurred optimism and higher demand from the top crude oil importer. Now, the greenback softened on Tuesdays following this announcement, and a weaker dollar makes oil cheaper, of course, for holders of other currencies, and usually reflects greater investor appetite for risk. And a lethal blizzard paralyzed Buffalo, New York on Christmas Day, trapping motorists and rescue workers in the vehicles, leaving thousands of homes, and a lot of these have been having effect on the crude oil futures. Now, what to expect from this technically around the continuation of the day? We have currently on the 1 hour time frame, and we have noticed a respect to this close by support zone between 79 and 79.70, of course, and 80.94, and distance being just a 12 pip distance. It's much more like a strong support, and we are noticing a gradual fallback to at least the latest support zone at 78.77, and an extension to 77.69 and 76.68. So if we're to make an entry to this trade and let it run down to this point, we are looking at nothing less than 30 pips from that trade, of course, which is good money. And we should be expecting a probable bounce back up following whatever fundamentals follow-ups thereafter. Now, that's our technical analysis on today's commodity, crude oil. Now, let's move over to the stock market. Welcome back, guys. And today on the stock markets, we'll be having a look at Nike. And we can describe Nike as the best-in-class brand and a clear winner in a duopoly in the more attractive athletic footwear space. Now, Nike has put up a robust 2Q numbers with a total growth of up to 27%, both from 27% on a currency-neutral basis, showcasing a best-in-class performance for a brand that does $70 billion of adjusted retail sales annually. In our view, Nike is the clear leader in a duopoly with Adidas and operates in the more attractive athletic footwear category. Meanwhile, Lulu operates in the increasingly competitive space of athletic apparel, where brand heat can shift at any moment, as we can see. Now, as a result of this, we have been expecting a much push up to the upper side because the market currently ranging at between 113 and 118, and we are looking at a probable extension to the 119 axis and also the 120 axis. So if we're to make an entry to this trade at this point and let our trade run up to that extent, we're looking at nothing less than 40, 45, 50 pips from that trade, and even a much more extended move to secure about 60, 70, 80 pips thereabout from this trade, of course, which is good money. And that's our technical analysis on today's CFD, Nike. I remain your host, Nick. Bye for now.